Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. We're still obviously operating remotely, and as everyone works out all their issues through the COVID-19, we're trying to cover topics that boards will be exposed to during this crisis period. And today we're going to be talking about M&A trends during the COVID-19 crisis. Joining me as my guests today are Amy Simmerman and Doug Schnell, who are partners specializing in corporate work with Wilson Sonsini Goodrich Rosati. Welcome, guys.
Thank you.
Thank you.
So, Doug, let's start with you. So, what are the current trends that you're observing right now in the M&A markets during the crisis?
Yeah, it's a great question. Obviously, there's been a decline in M&A as COVID-19 has worked its way through the system. I think in the past few weeks, we've seen a number of companies start to dust off their target list, particularly on the buy side. So these are generally large strategic acquirers who are starting to say, okay, I want to dip my toe back into the M&A market. What are the companies that I've previously identified that I might be interested in? And so they're starting to do that work again. I think there's really two challenges with all of it, though. Valuations, particularly in the tech area, remain incredibly robust. And in fact, most have recovered to where they were prior to the crisis or prior to early March when there was a lot of economic dislocation. And second, there's a real feeling in management teams of buyers of what's the rush to do something, right? There's a lot of uncertainty right now. Perhaps valuations will contract a little bit. There's no real need to do anything quickly. I could take my time. So I think both of those trends, uncertainty is always dangerous and bad for M&A. So I think that, coupled with the idea that valuations remain robust, we're seeing not as much activity as we'd like, but it's starting to pick up.
Well, Doug, I'm a little surprised that there wasn't more activity, and we'll talk about this in a minute, related to when a lot of companies were undervalued. But Amy, I suspect that there's also deals that were sort of in process that had to get unraveled by this because in essence, all hell broke loose. But what lessons do you feel that boards can learn from the deals that have unraveled in the midst of the crisis?
Yeah, that's exactly right. Beginning in March, we had deals immediately begin to unravel. Some were voluntarily terminated. We worked on one along those lines, but then others involved a dispute and went to litigation. And what we've seen since March is that over a dozen deals, I would say, are being litigated in the Delaware courts right now, particularly where a buyer wants to get out and no longer wants to be in the deal. So we've seen a lot of that activity. We're following those litigations. Our firm is involved in two of them. And when we think about deal lessons for boards going forward, I would say a few things. One, it'll feel reminiscent to people who went through this in 2007, 2008, where a lot of deals immediately began to unravel. There are a lot of similarities to that situation. I think some of this is buyer's remorse and people not wanting to spend money right now. Of course, some buyers are saying that businesses have really suffered and changed since they signed their deals. I think whether it's buyer's remorse or a suffering company might differ depending on the deal. But just to give listeners a sense of some of the deals we're talking about, some high profile ones were the Victoria's Secret acquisition by Sycamore that went into a dispute and then was voluntarily settled. We've got the WeWork situation, the tender offer and other related transactions with SoftBank. We've got the Forescout acquisition for almost $1 billion with Advent. So those are some of the litigations we've seen. At a very high level, what I would say to boards, there are some lessons here about where deals might have some uncertainty, and there are places where you can work with your advisors. And I think particularly for deals that happen and get signed in the next few months, you'll want to have an eye on these issues. So very briefly, one major area of dispute is, has the business suffered a material adverse change since signing? That's traditionally a very hard claim under Delaware law, but we're seeing disputes on that front. we're seeing disputes about how companies are being operated in the interim between signing and closing. Are they being operated in the ordinary course? There tend to be a lot of covenants about how the business will operate. If you do things like draw down on debt, might you have a problem with some of those covenants? And then in private equity deals, you might see disputes, and we're seeing some of this about, can you really force the buyer to close? And are the financing sources for the PE buyers still lined up? And can you get them to the table? So those are the types of things we're seeing.
So Doug, you had mentioned that a number of firms have restored their value, in the period since the crisis just cracked, but there's still a fair number that have not, that are sort of sitting there. And there's always, the good news about M&A is there's always opportunities in every market, okay? And we want to look at the sort of the positive side of that, even though COVID has put this black cloud above there. There's, again, people that are looking at markets, looking at competitors, looking at people that now that the tide has gone out, who don't have bathing suits on, and the weaknesses in their companies are exposed. So when you look at the positive side in that, knowing that these discussions, the strategic discussions are being ramped up a little bit. So what's the role of the board in working with management during this period of time, the crisis? And how can a board ensure that transactions done during the crisis are going to provide long-term value going forward?
Yeah, both really good questions. I think the primary way to do it is the way boards always do it, right? Ask the management team good, hard questions. Make sure that the management team has really spent the time necessary to think it through and has a plan, not just sort of, the immediate first day plan, but has that 90, 120, 1 year integration plan. I think that kind of stuff is particularly important right now. That's where boards, particularly because they bring a diversity of experience, can add a lot of value to their management teams, is making sure that the hard questions have been answered. Invariably, a director will come at it from a different perspective than the management team has. That's healthy. It should be encouraged. That's an important role for the board. It's an important part of board debate, is getting in there and really testing the level of understanding that management has of it, and whether they've thought through, what would happen if let's say the target is not performing correctly or having some trouble. What would happen if that continued, right? How is the management team going to change that when they're in charge of the target? So I think it's really the classic role of boards, which is asking management teams good, hard questions, and then letting the management team go out and execute, right? It's not the board's job to execute. It's the board's job to make sure they're informed of what's going on and give the thumbs up, thumbs down, and then empower the management team to go out and do what needs to be done to integrate or sell or whatever it is.
So I'm curious, when I was in the banking business, president of a bank, there was no shortage of social issues that sort of entered in on a lot of these discussions. Is it your experience that during the COVID-19 that really none of that has changed, that the social issues still play a pretty major role, even sometimes above the strategic?
Absolutely. We're spending a lot of time, and I know a lot of people in the market are spending time right now on MOE, merger of equals transactions. Those often just take longer because the social issues are so important. And it's frequently the case in MOEs that you'll work on it for a little while and the parties will stop and they'll go off to their respective corners and come back in a few months, something like that. But social issues remain critical. And I think, finding the right management team and the best management team, and whether it's the buyer's management team or the seller's management team, that's really important right now. And that's the hard work for the board at the moment.
Yeah, it seems like culture with the ESG, it's becoming just an enormous issue.
Exactly.
And to take on somebody whose culture would be significantly different would certainly, I think, even create a higher risk today for success. But I think we're going to hear a lot more about culture. So, well, listen, this is, people don't immediately think about M&A when, the crisis hit. But again, like I said, there's opportunities and there's risks. We're going to run out of time, so I want to invite you guys back to talk a little bit about some of those risks and protecting the company on what boards can do. So we'll sort of make that a part two. But before we leave, I wanted to ask you each if you would offer a final word of wisdom that you provide a company and board that either wanted to sell itself or acquire someone else during the COVID-19 crisis. So Amy, I'll start with you.
Sure. Yeah, let me just touch on a couple governance and decision-making type points. If a board decides to acquire another company, by and large, that's something that you get some deference on, and boards have some latitude there. Although obviously, governance issues aside, you want to think very hard about whether it's a responsible, good acquisition in the right time. If, by contrast, you're thinking about selling your company, as many listeners might know, there can be more scrutiny on that decision, greater likelihood of stockholder litigation. And so you want to approach that issue obviously quite carefully. But bottom line, your task, if you decide to sell yourselves, is to maximize value for stockholders. We're assuming a Delaware typical type corporation here. And you have to design a reasonable process to maximize value. So that's your guidepost. Within that, for the current climate we've got, you certainly want to think about things like, is this the right timing to embark on a transaction? Is there enough certainty and clarity around valuation issues for the board to make a decision? We saw a lot of deals go on the shelf a couple months ago because of the valuation uncertainty, although like Doug said, there's some positive movements in some industries. And then you do want to think about the types of deal certainty issues I touched on before and work really closely with your advisors on those.
So Doug, final words of wisdom?
Yeah, I think mine would be that time tends to kill deals, right? So if you're a seller, you want to continue to work really hard to get your deal done quickly because you don't want another shoe to drop or there to be a second wave or something like that. And then the buyer says, you know what, it's just not the right time. And I think if you're a buyer, it may be a little counterintuitive, but speed is probably important there too, right? Because you don't want to be in a situation where you're inside of a contract with a target and all of a sudden you're saying, gosh, I don't really want to buy this company anymore. The world has changed again, and I want to use the money for something else, or I need to refocus the management team on something different. So time is nobody's friend in M&A.
Yeah. Well, listen, I wanted to thank you both for taking the time. I do want to have you right back so that we can talk about sort of protecting one's company that might be undervalued. Because again, I think while I'm surprised at how many people restored their value, there's still a fair number of companies out there that I think are at risk to where their stock price is. So again, thanks for both for taking the time to join me. And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic to help you be a better board member or committee member. So we'll see you then.